me say welcome. This is Phil Elmes, and this is the first of the 2021 monthly roundtables, and we are online just like the rest of the world right now, and it's a Zoom meeting, and we have a kind of an open agenda today, but nevertheless, we do have an agenda. The roundtable, as you know, is always intended to be a networking and problem-solving session. When I find that I've got to kind of push people a little bit to do the networking they ought to be doing, but maybe that's my role. You want to hear about you don't need my biography, but I would like you all to introduce yourselves, and right now, and Tommy and Al. John, why don't you lead off and kind of help folks with the format?
Okay, I feel so special. So my name is John Lewis. I am by profession, I'm a licensed architect. I have around rehab projects going back to the time I was in high school. My father had a engineering firm and a construction company. So rehabbing is kind of something that I've grown, some kind of investor. And so I joined Urban Rehabbers. It was kind of a fluke. I was checking the ownership of a building that Phil owned in South Shore, and made contact with him, and that was 2013, and I've been connected ever since. I'm a person who understands the building and design and those portions of a project and real estate. Where I lack is the understanding about how to finance those types of things. So I've come to the roundtables over the years, trying to make connection with people who have that expertise, and who know how to run a building, operate a building, know how to efficiently be a landlord. So that's been my effort, and I've met a lot of interesting people, and I've seen a lot of people do some great things amongst this group. I also am here that if any of the members ever needed architectural services or anything like that, I'm also available to talk to them about those kinds of things as well.
Thank you, John. Tommy? You're just the guy to help John out. But tell us about you and what you're up to these days.
First of all, it feels good to see you. How you doing?
Thank you. Yeah, I'll tell my story in a little bit. I got a story.
Okay, but again, I'm Tommy Love. I'm on the south side of Chicago. I'm still trying to like John, figure this thing out. I'm basically new to investing, and also trying to learn more about becoming a landlord or holding my position as a landlord. And that's about it for me. I may have to put on another microphone so you can hear me better.
No, well, right now I'm hearing you fine. So whatever you got going now is working. You guys can hear me better because I use this microphone that you can see here, which I think gives me a little bit better voice quality. But I wouldn't expect most folks rely on their computers as I did for some time. Okay, Al, tell us all about your story.
Good morning, everyone.
Yeah, blood, sweat, and tears, right?
That's right, and then some. First of all, good to see you, Phil. It's been a while. We missed you. Anyway, my name is Al Curiel. I'm a long disciple of Phil, and after my stint at rehabbing and landlording, I tried my new venture in the mortgage space, mortgage notes. And I've been doing that since 2008-9 after the market corrected itself. And with emphasis in seller financing and becoming your own bank.
Yeah, Al, talk a little bit more about that. Why is that a good idea? Did you hear me all right?
I don't think he did.
And Al, can you hear me all right?
He's muted.
Well, it shouldn't. All right. Here you are.
Sorry,
Al?
What was the question? I'm sorry, I missed that.
I want you to tell me why this note business that you're in, which I think is very interesting, and we will come back to it in another session. Why is that a good deal? And why is it helpful right now?
It's a good deal right now because with the fallout, the waterfall of the 2008, 9, and 10 crisis, there was a lack of inventory because, or there was an abundance of inventory because the banks did not have enough personnel to service these delinquent loans. And so they had to create a market, and that market became the servicing market. So the Banks of America of the world, the hedge funds, and all of these entities that had so many doors to foreclose did not have enough capacity to do so. So what happened was they got smart and said, instead of foreclosing on all these folks, why don't we just create a market, package these mortgages that are about to be foreclosed upon, and sell them to the public, to the small investors like Phil, like me, like most of you guys. And we don't have to pay for the foreclosures, let them deal with it. And what resulted from that was that in exchange for that availability and inventory, the discounts were tremendous. So I could buy a note from a bank or a hedge fund that was originally valued at, say, just for simplicity's sake, $100,000. Well, when the market crashed and the correction took place, that $100,000 house had $102,000, $103,000, $110,000 mortgage value, but the unpaid balance was there was no balance. It was completely out of whack. So the bank said, "We'll sell you this $100,000 balance, Al, for $30,000." So I would buy the note. I would then proceed to foreclose the loan on the borrowers, or not, depending on the circumstances, and I would acquire the property, the mortgage. If I went ahead and foreclosed upon this note, then I would be in the business of real estate as well as the finance business. So that gave me the idea of extending home ownership instead of home affordability. So when that happened, the two things happened. One, it created a market for me in the lower brand space of the housing, and people were able to keep their homes. I had three choices. Once I took possession of the note, I had a choice. I can modify the loan. I could get cash for keys, or I can ultimately foreclose them. I did not want to do that. I wanted the people to stay in their homes. That is our goal. So if you see flowers on the bed and you see the landscaping, mama don't want to move. They don't want to leave. So I would work out a better schedule for these people modifying the loan. And since I bought the note at such a deep discount, I could afford to do several things. I can reduce the mortgage value. I could afford to reduce the interest rate, the coupon rate as they call it. I can do a variety of things and still have some decent income, passive income coming my way. And then the folks that kept the house would keep the house. And the third benefit is that the community would have a functioning house, paying taxes and everything else. So it's a win-win-win for everybody. And it just went from there.
Anybody have any questions for Al right now? Of course, we can, as I said, we can always come back to it. Last fall or summer, we actually devoted a whole session to this because there are intricacies. But on the other hand, Al's done well with it. He's perfectly happy to work with and coach people who'd like to get involved. And it's certainly a new twist on the business, which all keeps us in the business of distressed housing, which is where the values are. Without having to line up bank financing. I mean, and what it does, it frees you from bank financing and puts you in the driver's seat. I think that should be very interesting to you.
You have some latitude, right? You have some latitude with this, and with the new inventory that's coming. I think it's important for the group, and that's why I wanted to be on this today, is because we just found out that back in 2010, again, some of the fallout from the inventory of claims of foreclosures is still not completely disseminated. And what you have here is a situation where hedge funds like let's just say Credit Suisse and Goldman Sachs purchased $16 billion of they call them non-performing assets that are going to be deployed sometime in March or April, which for this segment of the group, for this group particularly, is going to create unbelievable opportunity to do several things. You can stay in the rehab space. You can take the property and you can rehab it and do your rentals like you want to, or you can do the seller financing thing, or you can just wholesale it if you want. I don't subscribe to that policy. That's not our intent. Wholesaling is something that is not attractive to me, but it's going to create an abundance of inventory that is going to be distributed, which not a whole lot of people know about, because these are going to be packaged together and sold as a case to small investors, and you can pick them up and buy them as, a one-off. And so it's important. Last fall, I think it was, Phil, right? When we devoted a whole session to this, I shared with the group the list of 1,200 hedge funds that I have personally become, or created a list of hedge funds that sell this inventory when it becomes available. And once you get in touch with these folks and you establish a relationship, you will be the first call they make. And the pitch is basically like this. Hey, Mr. Goldman Sachs representative, this asset manager, whatever the title happens to be, what kind of assets would you like to get rid of this quarter? And initially, because they don't know you, they're not going to call you back. The thing is, you keep persisting, you keep calling them. Don't call them on a Monday, Tuesday, or Wednesday because they're busy, just like the rest of us. But if you call them on a Thursday or Friday when they're winding down their week, they will be more adept to calling you back and saying, okay, well, if I send you they call it a tape. It's a spreadsheet. If I send you a spreadsheet of assets, take a look at it and let me know what you're interested in buying. So it's a dynamic that really is not available to a whole lot of investors out there. But for those few that are in the know, I believe that this is going to be, in my opinion, is going to be one of the greatest transfers of wealth in this country that is going to take us back to the 1920s or 30s. I really believe that.
And is that underway now, or do you expect it to get underway?
It's trickling slowly, but I think it's going to be an event that is going to happen probably by the middle of or the end of March of this year, with the first batch of that $16 billion.
Okay, did you hear that? March. What month is it now?
Yeah.
I lose track. I think it's January, February, March. That's 3 months from now.
Yeah.
So there's an opportunity out there for you guys to kind of, whether you change your business model, as Al did, or just take a look at this as an inventory of property that you might add to a portfolio, or wholesale, or whatever you want. That's the approach. I remember when I first got into this business, what I really wanted to do was somehow or another get next to portfolio managers who had the responsibility for straightening out bad paper within their institution. Well, I never made it. I never could make that contact. But if here we have Al kind of holding our hand, and he's telling us that no, here you can make the contact. I think this is better than the portfolio manager, and it sounds like the margins are better, and so it's a great opportunity. Anybody any questions for it before we move on? Don't forget, you guys aren't any.
Hello.
Good.
Good morning.
Good morning.
I actually do have a question. Now, with the anticipation of this happening, we say the end of March, is it better to maybe start the process of starting to communicate with these people, just trying to get a rapport with them now, so when it does drop, let's say end of March, early April, that we have already built some type of relationship with the person, so they're more likely to go ahead and assist us as far as getting us the information that we need?
That's a great question, Sophie, and thank you for presenting it. Yes, I would say yes. The answer is start getting ready now, start communicating with these people, make the phone calls, send the emails, start easy, and just ease your way into it. But once you establish contact, then these folks, they are under the same pressure as the rest of us, right? They need to get rid of the inventory. So if you get a tape, or again, I'm using the industry jargon, nomenclature. If you get a tape, these folks are going to want you to take action right away. So if you have a tape with 4 properties or 5 properties or 20 properties, when they send you the tape, you need to filter from that tape what properties are of interest to you. And then you are going to ask them, okay, Joe Blow, what is, I don't want to insult anybody. Please let me know what is the expected offers that you want. So you make your indicative bid, and then you go from there. Typically, right now, so for the marketplace right now, non-performing notes are trading at about between 65 and 75 of the unpaid balance of the mortgage, or the value of the asset, the house, whichever is less. And this is the trick. 65 to 75%. That's for non-performing notes. Those are the ones that you can foreclose or modify or whatever. For performing notes, that means the notes that are coming in that are paying, they have a long time of payment history. Because you have the passive income that is coming to you every month, then the price is going to be a little bit higher, anywhere between 85 and all the way to 95. To me, right now, those are too expensive. So I would wait until, again, when they start trickling in, and it's not going to be all coming at the same time. It's going to take a while, but the first batch, I believe it's going to be in March. At that time, because of the discounts being so low, you can realistically expect to pay anywhere between 30 to 40% on the dollar, 30 to 40 cents on the dollar on the non-performing notes, and about 55 to about 75 on the performing notes. Again, the formula is make your offer based on that percentage that I just told you, on the unpaid balance or on the value of the asset. And the reason I'm saying that is, let's just say, for instance, again, to keep it simple, $100,000 house that the mortgage is now 110, and the value of the house dropped to 60,000. Okay, just for example, I'm going to make my offer based on 45% of that $60,000 value of the house, not on the balance outstanding, right? So, and again, you establish a relationship with these asset managers. You tell them this is what you're looking for, the states that you want to do it in, and you go from there. Now, the additional formula for that is you need to look for assets in states where the foreclosure process, in preparation for your exit strategy, could be in states where the foreclosure laws are favorable to the investor. Illinois is not one of them. It takes forever to foreclose. Chicago, Cook County, right? It takes forever to foreclose on somebody. So Al Curiel's predilection is in the states of Arkansas, Ohio, Indiana, Michigan, Georgia, and Texas. Why? Because the foreclosure laws are favorable, and it doesn't take 100 days, 300 days, 400 days to foreclose on somebody. In Texas, for instance, if you buy a non-performing note that is not paying, you can foreclose on people within 90 days. In 90 days, they're out. Michigan, 60 days. If they don't pay, you can evict them. They're out.
Oh, ruthless.
Because we are dealing. Yeah, right? Because you're dealing with the velocity of money. So if you have investors that are investing with you and they're deploying their cash for you to purchase these assets, they're not going to want to wait, a year to 2 years to start getting their yields. So that's something to keep in mind.
Okay, Al, how do you work with others who'd like to learn this and get involved?
I created at your thank you for suggesting that. I created a course.
The check's in the mail, right, Al? Okay,
that's right. And so I have some students, and some of these guys have taken me up on it, and I conduct little trainings here and there. Right now, we're not in the acquisition phase right now, because I'm training these folks as to to get acquainted with it, get prepared, do your due diligence, several things to get your team together of lawyers. We don't do any rehabbing. We don't hammer hammer and nails, none of that. We outsource everything. We outsource the work to the servicers. If you're going to rehab the property, you get together with an outsource. You outsource that task to a vendor. Title research, canvas to find out any government bodies that do the code enforcement in case the places are abandoned, and you'll have a lot of those abandoned properties. So your job is basically to do the deals, negotiate the deals, get the asset ready, and get your passive income coming in every month.
If that sounds real complicated, those of you who are thinking about getting involved in rehab, just generally speaking, okay, it's your goal, that's why you're here. If you spend some time with me in the classes we teach, let me tell you, there's a lot involved, and you got to learn a lot of stuff. And so when Al's listing out the steps he's got to go through and so on, actually, it is simpler than what we do as rehabbers, whether we're going to be investors or resell the property. So this is, I guess what I want to say is this is achievable, and the margins are great. Okay. All right, well, thank you, Al. Al, how can folks reach you if they want to? No, not hearing you at the moment. Whatever. There you go.
Can you hear me now? Okay. I can send you the. Let's see. You can text me at 630-797-6521. That's my personal mobile. And text me your number and your name and your email address, and I'll send you the list, and I'll give you some choices as to what you want to do. I don't enter into any joint ventures. I can definitely, you can work on some kind of an arrangement, but I teach you the business, and I can coach you, and I can do a lot of things, but joint ventures are not, we've had some bad experiences with those. So I can definitely show you the way, and we can go from there, from acquiring inventory to giving you some of my resources and network and what have you. It's a fun business. It's a good business. It's a fun business. It makes you feel good that you are able to do something for people to provide them with affordable home ownership. And without
how do you do something for people in this model?
You keep them in the house, and because you're dealing with a lower band asset, right? You are able to qualify them with the use of an RMLO, residential mortgage loan originator. They will be qualified. So if you recall back in 2003, 4, and 5, when you had all these toxic prime mortgages that were so bad, anybody that could fog a mirror could get a loan, which was so unrealistic. With our model, you're able to qualify these people and offer the homes via seller financing. And two things are going to happen from that initiative. One, you're going to be able to afford, that they're going to be able to afford the mortgage, because these people would otherwise be unbankable, as they refer in the business. They don't qualify for these, but you are able to provide it for them. And you now become the bank. You are no longer the wholesaler or the investor that is going to flip the house and everything else. You are going to have income for the next 30 years. And then you can take that piece of note if in a passive form of income. If you decide to deploy more cash, all you do is you take that note that you own, where you're seller financing it, and you sell it on the secondary market for a small discount, and then you can get paid for that, and then you can now have cash for other investments. My focus right now, and this is what, if I can offer something for you guys, is place yourselves in a cash position. Sell whatever it is that you have that is not performing, that is not working, that you're stuck or whatever. Offer it at a discount if you must, but put yourself in a cash position, because when these hedge funds start offering this inventory, now you are going to be able to offer cash for those assets at a deep discount, and you can turn around and flip it and offer the seller financing for these folks that are able to buy. You qualify them, and now they have a house. You have passive income coming in for the next 20, 30 years. And you can have a very easy, comfortable way of living.
Okay. Sounds, it's got to sound, at least sound intriguing, if not exciting. So I leave that to you folks to kind of sort it out. You can visit more with Al in your own time, but Al, thanks for that rundown. I think it's worthwhile revisiting this model from time to time, because what I'm hearing is the lenders aren't necessarily loosening up, the ones we deal with, and so you're kind of stuck. You want to get involved in the business, and if you can't find lenders that'll do it, or they'll say, "Fine, I want 30% cash, and then we'll fund the rest." Well, that doesn't help much.
Right.
So,
Right.
Our job here in this program is to try to help you find ways to truly get underway. We're working with people, not actively working with them, but we have people in our program who've been more or less with us for 15, 16, 17 years. In other words, if you can, and when they get in jam, they know they can come to the group. Some circumstances they can come to me, and hopefully at least get some qualified advice. Sam, anybody got any further questions on this before we move on? Okay, Sophie, thanks for your help with that.
Thanks, Sophie.
You guys have to get better about asking questions. Be like Sophie. We want you to be like Sophie. Yeah.
I have so many questions. I don't even want to ruin. I don't want this to become about me.
Go ahead, ask away. Just again, if you have any specific, just 630-797-6521.
No, believe me, I have it.
All right.
You'll be getting a text message. Don't worry.
All right, let me tell you one more thing. Some of you are, but some of you are not yet members of the program. If you're a member of the program, the last Thursday evening of the month, any given month, we have a call-in only for members. And the whole purpose of that is to bring your technical questions that you'd like some help with. And the group answers it. I answer it. Everybody pitches in and helps. And that is the idea. And so it's a very soft pitch for membership. But I think it would be in your interest. I think it would be in your interest. All right. So let's moving right along here. Okay, we get there. Now, Tiffany, how are you doing? Tiffany, Tommy, we've talked to you. Is that Richard Thomas? I'm not sure. You got R. Thomas. R. Thomas. Who's got? We need Tiffany. Tell us about yourself. Just well, you got a question now. We want to know about you, what you're doing, what your challenges are. Maybe we can help.
Yeah. So this is my first. You can hear me, right?
I can. Yep.
So this is my first webinar. It's my first attendance to the group. So thanks for the invite. I am breaking into the business. I'm coming in through several areas actually. So I have my general contractor's license with the city of Chicago. So I will be doing some rehabbing. I am going to be investing and doing some buy and holds and wanting to be a landlord. And on January 20th, I will be taking my real estate broker's exam and hoping to pass that on the first attempt. So several areas into real estate that I am breaking out into. So the goal that I have is to first get my feet into being a real estate agent, and probably just in terms of selling or buying, being a seller's agent, seeing what, as of right now, properties are flying off the shelf even before they hit the MLS. Anything that I see that I want to hold for myself and maybe rehab, that's kind of what my focus is. And I'm also going to be, my niche will be probate real estate. So that will probably be where I will be kind of rehabbing and maybe working with the city of Chicago on some rehabs or buy and hold. So my experience is kind of minimal. So right now I'm just trying to soak up any and all information that I can get. So that's why I'm here listening to all of the information.
If I do say so myself, you made the right decision. So you're certainly welcome. That's great. You got busy lady. You got sound. I didn't keep count, but it sounds like you're working on about 6 different pieces of this. And
I work a full-time job.
No, that's good.
Luckily, the pandemic, I was able to sit here in my basement and do all of this right here in the comfort of my own home.
I think for a lot of us, well, I've always had the choice, but for a lot of folks, this opportunity, if you can stand the isolation, if you can figure out ways to deal with the isolation, this opportunity to work on your own at your own time. I mean, that's what entrepreneurship's all about. It gives you the opportunity to almost view your job as a business opportunity and start to massage it in your favor and the company's favor, the client's favor. So it is an exercise in really putting together your own business, and it is a great opportunity. Now, the way you deal with the isolation is you hook up with the Urban Rehabber Program. Because we work at kind of creating. Well, we've got at least two regularly scheduled events for members a month. Okay, and and that's a chance where you can see it. I'm really trying to beat you up to share your issues, share your opportunities, and so on. And the other one is, as I mentioned earlier, the Friday, that last Thursday of the month where members come in. That can be a half-hour session. It can be a 2-hour session. It really, as long as there's interest and a need to continue, we can. We're not on the calendar, and so on. So do think it over, right? And if you have any trouble figuring out how to join, email me. I'll help you out. And that's really the only income anymore that my life is such that I really don't have the opportunity to get out and actively rehab as I did as recently as a couple of years ago. So what I can do, as Al is doing, is I can do my best to coach you to some success, and to hopefully be on hand when you get in a jam. That's the idea. Okay.
Thank you. I appreciate that.
Yep, that's what it's about. Okay, Tommy, we've talked. So Sophie, we've talked, right? Yeah. No. Oh, talk to us, Sophie.
I didn't tell you how I got here. Good morning again, guys. So how I ended up here is something about this last year that made me realize that the corporate world, I'm just pretty much tired of it. I'm exhausted. Sitting in an office all day and just feel like you're not free and or living life to like as far as my expectations right now. So it's not really about the money for me. It's about the financial freedom to move about, how I like. So what happened for me last year is that I got my first property, and right before that happened, I was furloughed. So I did end up spending a lot of my own personal savings into fixing this property. Now the property is paid for in cash, it's rehabbed in cash, and I have nothing else to do. So I'm actually in a process of acquiring another property, which now listening to this conversation, I'm kind of thinking about pulling back now. I actually was supposed to go see some stuff today, but I kind of took a hit on my credit because I had to use my credit cards a lot during the time I was furloughed for like 5 months. And that was because I was rehabbing the property that I had just purchased. And so I was only qualified for an FHA loan and not a conventional. And that's what I was going to do. I was going to get a 2 or 3 unit place, something that's somewhat livable, and do the rehab and then use that income to kind of give me the opportunity to leave my job, because that's really what I want to do. I just really want to leave my job, and I just kind of want to focus on like real estate and things like that. But now talking about purchasing the notes and things like that, I'm like, crap, I just spent all my cash. I wish we would have had this meeting months ago and I could have had some money. But I guess what I'm trying to figure out is like which route I definitely want to go. I do want properties that I want to keep just to have that monthly income coming in. I do want to get into the maybe rehab and flipping thing, or just purchasing notes and then selling them too. You know what I mean? Back to the market. So I'm not sure which way to go. I thought I had it a little bit figured out up until this conversation. Now I'm just like, I feel like I have to go back to the drawing board and rethink the whole thing over just to take the best approach possible.
Is the property you were working on occupied?
Huh?
Is the property you were working on occupied?
Yeah, by me.
By you.
And I have a tenant that rents out a basement apartment. So as of now, I have no mortgage or anything. I just pay property taxes and insurance and stuff like that.
You got a lot of money tied up in that property. So you really ought to be thinking about and talking to folks that can give you some advice on
about selling, about what? Selling the property.
Don't sell it. Look, the serious money is made in our business by those who keep the properties, not those who just,
I was saying, I just got it.
I'm going to be a wholesaler, and well, that's great. You get to pay a lot of ordinary income tax. You're making a fraction of what the potential is of whatever property you're dealing with. So you've made a good start. So I guess what you ought to do is really be thinking about or talking to people who can advise you on how you can pull some money out of that property, kind of relax, take the pressure off. So
like, should I not move forward? I'm thinking with this loan.
You have a loan pending?
Well, I'm looking at other properties now.
Yeah. All right. Well, but you're going to need a down payment for those properties, aren't you?
Right.
Have you got the down payment?
Yeah.
Without tapping out another credit card?
It won't be my credit card.
Oh dear.
Sophie, can
Whatever works.
I ask a
Whatever
question,
works.
Sophie?
Yes.
These properties that you're looking at, where are they located?
In unfavorable areas, of course.
Okay.
So some of them have long-term tenants in it, and some of them need help.
Are you, let's see, are there loans against these properties that you're looking at? Are they being sold by the landlords?
They're being sold by the landlords.
Okay.
I've seen some foreclosures I was interested in, or something that was loaned by the owned by the bank, but they as soon as it popped on the market, it's like pending I guess purchases. But
Here's a trend that, again, for the group to consider right now, at the present moment, at this moment, you have what we call a lot of burnt out landlords. Why? Because eviction laws they're going to be relaxed, and they're going to start evicting people. They're not getting the rent money because of COVID and all the other circumstances.
mm-hmm.
Forbearances are going to be lifted as well after the administration takes over. You're going to have an overabundance of inventory. So what you may want to do is approach these folks,
Mhm.
approach these properties where you're looking at, and see how flexible they are with seller financing. So what you're going to do is you're going to offer this guy, you're going to offer this guy or this landlord or these multiple landlords
Get that out your mouth.
you said, if you tell them, if you agree to my terms, I can give you full price for the property. And what you're going to do is you're going to create a note or two notes. You're going to create a note for the down payment on the property that you want without using any of your money.
Okay.
You're going to create a note for a down payment, and you're going to create a note for the second mortgage.
Okay.
And you can stack them, meaning that the down payment is going to be paid, and the second mortgage is not going to start until your down payment is done. So again, as I stated before, $100,000 value on a house, the building that you're looking at, offer them $20,000. It's a down payment, and if you will seller finance the other 80%. You're going to create a note and mortgage for the first loan, for the first down payment, at whatever interest rate, whatever the prevailing note is.
Which would be the 20,000 you're saying plus the
Correct.
interest, right?
Correct. You're going to create it, and then you're going to start paying on that. It's a very $20,000 loan is not a whole lot of payment, right? So you get the rents in the meantime. You get the rents from these folks. Then you are going to pay on that $20,000 first down payment for 3, 4, 5 years, whatever. You work on the terms, and I can coach you with that.
Okay.
You're not going to pay on the second loan, on the second mortgage, until the payments of the first 20% are done.
Right.
And you're going to create that note again, that for the 80%. Now you have two notes. You can take the two notes that you have, and you're going to take them to the secondary market and get cash for them as if you were refinancing. Okay. But then you have a wrap, and you're going to wrap the wrap. And the reason I'm asking you how motivated these people are is because with the market condition right now, you're in a great place to acquire properties, even without waiting for the notes down in March or April, whatever it is that I said. In the meantime, you can start your negotiating or your technique and your strategy for acquisition using the creativity of seller financing.
Mm-hmm.
That's a strategy. I mean, you may, without having to come out on your credit cards or any of that down payment, because you're financially strained right now, but you want to keep moving. And I'm here to tell you guys, you don't have to wait until you have money to get creative with the financing.
Al, can I ask you a question?
Yes.
So what's the difference between subject to and seller financing in the terms, in the scenario you just gave, Sophie?
What you have is, yeah, it's a good question. Thank you, Tiffany. What you have is subject to is you are taking over the property subject to this landlord's banking, being able to accept, the offer. You're offering the financing. So in an effort for them to, if the properties are paid for, even better, right? Because you don't have to deal with banks or whatever. But in the situation where you have I can't see this too well. Hold on a second. But in cases where you have the bank, you need to let them know, I'm offering seller financing for this house. The landlord has to say that, and then they accept it. Chances are they're not going to call the loan, but you need to know the banker. The landlord needs to know the banker. One way to get around it, which is perfectly legal, is to create instead of doing the subject to that you're referring to, instead of doing that, you create a personal property trust. Why not a land trust versus a property trust? Because a personal property trust is that you're dealing with a mortgage, which is personal property, not real property, right? The real estate is the real property. The mortgages that you're creating is giving you the flexibility and the balance to offer that, bypassing that. So that achieves that. And also the other thing that it achieves is privacy. If you don't want people looking at you, looking at your assets, because you're a landlord with 4, 5, 10, 20, 25 properties, you put everything in a personal property trust. And that protects you, protects your financing, your bottom line, and it puts the property that is not going to be a target for bad actors out there. And there are a lot.
Yeah, let me just add one thing, or underscore one thing. I've been arguing the advantages of seller financing, contract sales for years. I really think it's a great opportunity to essentially maybe do a deal now that would otherwise take a while because of financing issues, having to deal with a bank. Because the one thing I want to point out to you, and because that is, Sophie, that when you're dealing with seller financing, where you're looking to the owner of the property to provide the financing, you've pitched a deal. He says, "Well, you give me full price," because nobody else is going to give him full price. I mean, understand the market. In today's market, he's looking at you. Well, you want to do seller financing, or people are offering him cash at about 60 cents on the dollar. So suddenly you look pretty good. Okay, and one more thing, and you kind of indirectly brought it up earlier. But when you're buying on contract, there's nobody checking your FICO score. It's like having a clean slate. And if they want to accept $1,000 down, that's between you and them. If they want $10,000 down and you've got it and it's worth it, that's between you and them. But there's nobody dictating these terms. And so I think it's very much worth looking at. And you'll find in your toolkit that you get when you join, there's a special contract that you use for Illinois that you can draw up yourself. And whether you're selling or buying, it's a wonderful, wonderful contract. It'll document the deal you want to do, and also kind of explain how it works. And it's very clean, it's very legal, it's very ethical. It just gives you that much more flexibility, and that's what you're looking for. Okay, I think we should.
So I have a question, but I got to tell you a little story, Alvy. And since it looks like maybe you're the only finance person on the call, and I got a different business model from, I think, of what a lot of people are doing here. I've always been focused on trying to get a multi-use, mixed-use, commercial, either all commercial or commercial and mixed retail. Chicago has a lot of building types, which there's commercial on the first floor and then residential above it. It's very commonplace. Last year, I had my eye. I live in South Shore, been in South Shore since '89, so I'm very committed to this neighborhood. There's been a push by the aldermen and by residents to redevelop the 71st Street commercial corridor. So I've been looking for years for, properties that might be part of that whole thing. And I think once the Obama Library gets underway, there's going to be this expansion of redevelopment in a perimeter around it. And I think South Shore is going to capture some of that. So I purchased a commercial building it was commercial retail on the first floor. Second floor was office. It was built that way. What I did was something actually I learned here in Urban Rehabbers was to do a self-directed IRA. So I cashed out one IRA from my years of working and took money out of a second one, put it into a self-directed, and then paid cash for the building. Now the first floor commercial retail was vacant, but the second floor had a tenant. I closed in April. The tenants, and there was supposed to be rent flow. The tenant lease expired end of April. And of course, they were telling me that they were going to renew. But then because this is an institutional group and they paid their rent, a group of people pooled their money to pay the rent. Half of them went unemployed because of COVID. So they had to move out. So now I got this vacant building. I'm trying to do some basic renovation. I have a potential tenant, which is still undervalued rent because that's where we are right now. But I'm thinking of a source that I might be able to borrow a small amount for some basic repairs and renovation to make it just a little bit more attractive for this particular tenant. And then maybe because I don't have the cash flow, maybe be able to wait maybe 6 months before starting to pay this back. And I'm not talking about hundreds of thousands. I'm talking about maybe 50. Do you know of any kind of source that might have that lending model? You're muted. Okay.
Yeah, right. Now, you know what, John, I do actually, and the reason I know that is because, and we can talk offline later on if you want.
Mm-hmm.
I give you my information, contact me. Yeah, and right now I'm so glad that the timing for this conversation, it couldn't be more perfect because at the start of this conversation, I started talking about, residential space being overflooded and about to be released in March or April. But what's been happening, the phenomenon that's been happening here, guys, is that since late October of last year, the mortgage space and the commercial has been really affected by COVID. Everybody has been adversely affected by this. A lot of professional buildings, commercial buildings, doctor's office, retail, whatever, they're abandoning these properties because for obvious reasons, people are furloughed and whatever else. So the discounts for commercial and professional buildings is through the roof. It's unbelievable. I'm sorry to say that this is in your case right now, but you can profit from it. I can hook you up with some of these lenders that may have an appetite in your mix of the building, and I'll send it on to you. But what you can do is probably offer a strategy that I might consider for you might be a 50-50 model, meaning that you can create a note, pledge that note, extract some cash to do a little minor fixing up, or 50 grand is not a whole lot of money. You shouldn't have a whole lot of hard time with the underwriting company giving you the loan. And then what you can do is you can do a subject to, as we talked with Tiffany, or create a note loaded with your tenants, because you'll have the place fixed, right, with a cash infusion. So loaded with some tenants and do a 50-50 model, meaning you can offer that building for sale by owner, that's you, and offer it to a set of investors either in California or New York. Why those regions of the country? Because those folks in those regions of the country cannot wrap their mind around the values of real estate in the Midwest. If you go to San Francisco, a shack, a 700 square foot place sells for $700,000, $800,000. Likewise in New York, Manhattan, Midtown, Queens, whatever. Anything of that asset value type is going to be very, very attractive to these folks. And and there are lists of people that are investors, that are certified investors, accredited investors, that would say, all right, how much would you want to sell me this thing for, John? And he said, okay, let's just say, for instance, $200,000 building. You give me $100,000 down. I'll carry the other 100,000 in a 10-year note. So you have your 10% down payment, right? And then you finance the other $100,000, and you're not a landlord anymore. You are the bank. And then as the rent rolls come in, you get that money. The investor is not in a rush to get his yield, because this is retirement money for them. And in 5 years or 10 years or whatever, however long they finance this thing, then the owner is going to have a brand new building. That's a 50-50 model. It takes a little more sophistication, but it's very doable in your case because of what's going on right now in the marketplace with the commercial building. But in lieu of that, you can do you can get the loan from some of these sources that I can hook you up with.
Okay, I wrote part of your number down, and so we started talking again. It's 630. What's the rest of it?
I'm sorry?
Your number. Again,
my number is 630 797 6521.
Okay, got it.
And my name is Al. Last name is Curiel, like Muriel. Just put a C in there.
Mm-hmm.
But it's a very good model that I'm working on 8 deals right now that look a lot similar to what you're talking about. In my case, it's a multi-unit building, one in Dallas, one in Houston, 2 in Georgia, and there's another one. I think it's in Michigan. Same scenario, same kind of strategy. You're going to offer the 50-50. You're going to finance 50%. You're going to get the down payment for 50%. And then after 5 years, as long as these investors don't need the money, you can realize some really beautifully nice passive income where, at the end, when the first of the month comes, you wake up, there's a check in the mail for you.
I like that.
Yeah. It's really good.
And one more thing I might mention to folks is Al's one of the few people we've had the opportunity to have help us who's not looking for a commission. So you can think about that. So he's not pitching deals that he's gonna get paid for. So I think it's a wonderful opportunity for us. And thank you, Al.
You bet. It's called Passing It Forward, because I've been with Phil since 2002. Remember that, Phil? When we had those sessions on Saturday and the Holiday Inn. Yep.
It seems like a long time ago. It was a long time ago.
Yeah. But it's a good group. It's a good community. And again, I'm here to help.
Yeah, thank you. All right. Now let's move along. We got Tiffany. We've talked to Tiffany. We've talked to Sophie, right? R. Thomas. You want to turn your microphone on and talk to us? Good. That's the first step. Now talk to us.
I wasn't stationary, so I didn't want to get on. Hold on a second. Okay. Mark Zuckerberg puts tape over his camera too, so that's what I do. So, okay. So I'm Roscoe Thomas, not Richard. Roscoe R. Thomas, and I've been at your meetings before. I was living out on the East Coast in the Washington D.C. area, Northern Virginia to be specific. But I have since moved back, or I'm in the process of moving back to Chicago. So I need to pay more attention here now. So basically, I'm on the investor side. I'm not a realtor, basically I fix paper, not houses. So I'm not on the rehabber side. Basically, I'm marketing to expired, withdrawn, canceled MLS listings. I have I need to get a rapport with a local Chicagoland area realtor so that I can secure the list that I need for my marketing purposes, which is one of the primary things I need to do here now. and basically I focus on sub 2 deals, lease options, things of that sort. I thought that the foreclosure opportunities would probably be a lot greater here than they would be on the East Coast. And I'm in the process of the relocation, so I'm not completely set up here yet, but I'd like to build a rapport with a local realtor who can pull these lists for me. Basically what I do is since I'm having to start from ground zero here, when I communicate with people that I market to, and if they are not, if I come across a house that requires rehab work, because I don't do the rehabs, or if I come across a prospective seller who would preferably, whose situation is more commensurate with an outright sale through a realtor, that realtor who agrees to work with me to pull these to pull the list that I'm looking for. Anybody that I run into that I cannot help, I will refer those leads over to them. That's the trade-off until I can build a rapport with them to where I can, possibly get access to the MLS information myself. What else? Basically, that's it. I'm a former telecom guy. I think I used to work for Nextel. That was a long time ago now. So I'm all in on this, and basically need to build my contact list now that I'm back in Chicago.
Okay, very good. Thank you. I let that R go by me. It's not Richard.
It's Roscoe. Roscoe P. Coltrane.
There you go. All right. Yeah. Thank you, Roscoe. All right. Well, good to meet you, my friend.
All right.
And, hopefully we can, I don't know if you were on in time to hear that I was kind of promoting that we have another conference coming up in the end of the month. It's always the last Thursday evening, but it's for members. And it's a kind of situation where members get together and basically the same model, only we expect the expertise to be higher and maybe the problems to be more complicated. But in any event, we get to get together as a group, and again, it'll be one of these Zoom calls. The Zoom is nice because we can't be in a room, but at least you can, you're almost eyeball to eyeball here with the other folks. I find it, frankly, a more personal and in some ways more intimate experience than all the years we had these public meetings and have 20, 30, 40 people in the room. Well, I kind of have a sense I'm getting closer to you all individually on this Zoom thing. I hope you agree. I don't know. That's my thought. All right.
So when I pass my realtor's exam, Roscoe and John, I can be your realtor.
Okay, that sounds like a plan. No, seriously.
Service, so I'll put my information out there for you to contact me.
Okay, all right, and I will do the same.
And you can.
What's your name again? What's your name? Tiffany.
Tiffany McFarland.
Okay, all right, that sounds good. Quick question: Are you Cook County, Will County? Where do you?
I'm stationed in Will County, but I will work. I will come to Cook County. All of that. And as of right now, I do have access to PopStream, and I can pull properties for you as of right now. I don't, so okay. We can talk offline as well.
Okay.
Anybody who's comfortable putting their phone number just out there in the context of this meeting, That's entirely up to you. But right now, Roscoe and I'll be getting together with this other person. Maybe you want to just put phone numbers out there.
Okay, I can give it to you now. I've got it's a 703 number. It's
Okay.
703-926-3019. And I have a seller's website and a buyer's website. I don't know if you have any interest in that. You can take a look at it.
Yeah.
What's your number again, Roscoe?
703-926-3019.
If you look in the chat, I already put my number down
Okay.
in the chat room.
Okay.
Yeah.
Okay, fair enough. Okay, I see it here. I don't have my glasses on. Okay. All right, very good.
And you're just getting old, Roscoe. You're just getting old.
I know. Yes.
But you look so fine without your glasses on. I understand.
Well, like I said, I was born and raised here. I was in the first graduating class of Whitney Young over there.
All right.
Believe it or not.
Well, welcome home.
If that gives you any indication. So.
Wow.
Welcome home. Okay, who's up next? Are we having fun yet? Todd, you haven't spoken up. Why don't you turn your open up your microphone and talk to us.
Hey, Phil, how you doing?
Hey, I'm doing okay. How are you?
Good.
I know you've been here right along listening. I think we got a good meeting going here.
Yeah, excellent meeting. Excellent. Yeah, you've known me for God knows how long. We go back way. In fact, I bought a place from you on Campbell Avenue. Way back when,
I must have seen you coming. It's
I think that's when you were at the was it the Holiday Inn in
yeah, it was actually Ramada, I think.
the Ramada. Okay, yeah.
On Lakeshore Drive.
Yeah, way back when. I'm a landlord. I have a 3-unit that I own on 108th and Calumet. I've got a 2-unit that I live in on 75th and Calumet. Slow down a little bit, trying to add. I want to add some more rental units. Actually, I might be looking in Ohio more so than Illinois, but
sounds to me like you ought to be talking to Al, who's already in Ohio. Mm-hmm.
Well, I'm originally from Ohio, born and raised in northeastern Ohio. So I have a lot of people, a lot of family in Cleveland and in the surrounding area, suburbs. But definitely want to add some more rentals. I was fighting getting a realtor's license, but if I want to do some wholesaling, then I need to go ahead and do that. So
you don't need a real estate license to wholesale, Well, now hold it. In Chicago, they put this goofy new regulation in, says they want a license for wholesaling. I think it's very strange, but anyway.
Well, how do you get around that, though?
How do you get around it? Well, as far as I'm concerned, this is America. You go out and you buy a piece of property, and somebody comes along and wants to. They in turn want to buy it from you. Sell it. What the heck? Let the city sue you. I don't know. I just don't understand what their regulation is all about. It makes no sense because also I think what they're trying to deal with there is people who buy a piece of property on Monday, and then they've got a buyer lined up to take it over from them on Tuesday. Well, you don't have to run your business that way. So I think just consider yourself a dealer rather than a wholesaler, which is how I spent the first 10 years when I came into this business. I would buy a piece of property, I'd mark it up, and then I'd sell it. Real simple. And I think that's like I said, this is America. We're supposed to be able to do that stuff. Yeah.
I haven't seen a wholesaler get caught yet. Marketing is getting a little tighter. I will say that because I wholesale, but I also been wonderfully networking with rehabbers and brokers that love wholesaling. And so they don't really know much anything about it. So if you're good at wholesaling, like I've been, like I said, networking with brokers that aren't familiar with that type of strategy, and it's finally coming to fruition. Like it's working. Actually networking with them on like what Roscoe is looking for, expired listings and such. Like we just sold a building, beautiful rehab building at 6229 Eberhard a couple of weeks ago. And it worked out wonderfully to an investor that wants to Airbnb it.
Nice.
You get what I'm saying? Yeah, and it took me and a broker and the rehabber who was underwater because it's been sitting so long. Yeah, so it worked out.
Good. Congratulations. Good to see you, Linda. All right. Do we have, is there anybody who we haven't gotten to yet who'd like to speak up? And we'll pause roughly, 15 seconds. And if not, we'll move on to the next item on my agenda. Okay.
Excuse me. Hey, Phil? Okay, you guys can hear me?
Yeah.
I was sitting up here. My name is Walter Jones. Okay, I don't know if you remember me or not, Phil. I couldn't get my video up. I don't see myself. I don't know if you guys see me. I got it hooked up, but
Yeah, we're hearing you just fine.
I'm not okay, great. I'm not that technically as far as swabbing. But anyway, I just wanted to introduce myself. I kind of fell out of the group. I was a member some years back when you guys were meeting over there in Hyde Park. Remember John? That's the only one that I see that's familiar. And you, Phil, of course.
Time goes on.
Time goes on. And, I just wanted to say that, I want to get back into the group.
Okay. So how are you spending your life? What are you doing now?
Okay, right now, and since I got together with you guys, I have acquired about 4 properties. Basically, my strategy is buy and hold. I own 3 properties outright, but they're single families, and so far everything's been sweet up until this year. And I heard John touching on the COVID situation, and I just took it like, okay, now it's my turn. It's my turn. I mean, everybody, I had never really dealt with a few turnovers, relatively smooth sailing, but this time I think I got one of those professional tenants. So that's another conversation that I'm kind of trying to figure out, as far as, did they change the criteria for notices that you give people during this pandemic?
I'm not a good source for landlord information right anymore. Maybe somebody else can respond to that.
Yeah, that's my dilemma. And I was just wondering, did they change the laws? And I guess I got to do my homework, a little research.
Oh, darn it! Yes, you might. Then you can come back and tell us how to do it.
Okay, that sounds like a plan.
All right. By the way, this session we're having here is most months it is the second Saturday, so you can just kind of have that in mind. Okay. And this time it's kind of goofy because Saturday kind of fell in right after New Year's or something, and but I guess maybe we are on the second Saturday. Anyhow, count on that, because that is an open meeting. You also ought to be thinking about joining so you can participate in our Friday night members sessions. But anyway, enough of that. So welcome back to the fold, my friend.
Thank you.
Okay. Anybody else now? Because got a few other things to talk about. All right. Okay. one thing that probably you guys deserve an explanation. I kind of dropped out of sight there for a while, but I've got an excuse. I can get a note from my mother if I need to. As a matter of fact, right about now, this last year, was it 2019? Was it? Time flies. I had surgery, and which I've never had the experience of before. It was a new thing, and the upshot of the whole thing was that it went very well, and I hurt a whole lot for about 4 months. I really did. It took a while to heal. So I kind of, quite frankly, the computer was the farthest thing from my mind. I did a lot of sleeping, and I guess maybe I got better. So that was pretty good. As I was kind of getting up and about, come last June, we're doing things around here, taking little day trips here in southeast Wisconsin, and we were over on the lakefront there in Milwaukee, first week of July, and son of a gun, I had a stroke, and yep, I just kind of dropped like a sack of potatoes on the pavement and kind of whacked my head. As far as I'm going to tell you, I had sustained no serious damage, but you'll have to make your own judgment there. In any event, that resulted in me, in fact, being hospitalized for a couple of months, and then since that time, varieties of therapy: physical therapy, occupational therapy, speech therapy, trying to get my voice back. I don't know if you noticed, but I'm kind of a little bit gravelly, and I'm told if I work at it, it'll come back. But that's been my story. And now, as it happens, some things I didn't miss out much because the whole world stopped in its tracks to wait for me with the excuse of COVID. So we're all of us are about to start kind of crawling out from under the rocks we've been residing in and under. And so that's where I'm at. But yeah, I've been kind of made the suggestion multiple times that last couple of years I've not been actively rehabbing. So, but what I can do, and what I am doing, and what I'm interested in doing, and I don't have to be driving back and forth to Chicago, which quite frankly I can't do now, though I will be by, I get past June, July, I'll be pretty much back on my feet and not quite rocking and rolling, but I'll be all right. But my emphasis is going to be to expand the coaching activity somewhat. That's why I almost let this Saturday go by. I said, wait a minute, let's get started with this. So these Saturday meetings are commencing now. They will be every month from wherever I am. And I think they're a good session. I enjoy them. And I think it'll be good for you folks. And I think the power of our group has always been in the networking that you can do. And for good, and hopefully, I hope you guys appreciate that this morning, some of you are here for the first time. You've just, made the acquaintance of about 12 or 14 active investors, rehabbers, and including an architect who wants to be a rehabber. No, we forgive him. It's okay, John. And then the coaching I've typically done on a case-by-case basis. People will contact me and say, look, I want to get started with my first project. Will I work with them? Well, the answer is yes. And what we do is we set up regular calls every 10 days or 2 weeks. And we have an agenda. And it's my job is to not only provide technical expertise as is needed, but also some folks might find it useful that coaching can also involve kind of overcoming whatever's blocking you from what you want to do, dealing with those issues, setting some goals and objectives, and then kind of my role in that is to kind of keep you honest. I keep coming back to you, saying how you doing with what you said last week, and hopefully we get a good answer that you're actively involved in that, and so that's coaching. And the last thing is, which I've always been doing for years. Many of you, if not most of you, have taken one or more, but it's the workshop thing that we've always done. There are about 7 or 8 workshops that we've been teaching. They're workshops that I wrote. There's a full book that comes along with it. They typically, they've always been 1-day workshops, occasionally 2-day workshops. And now under the new era of Zoom, we're doing a workshop typically on 5 successive nights, and they can of 1 to 2 hour sessions, and that seems to have worked fairly well. And so I'm going to be resuming that. And the workshops have to do with construction practices, stuff like John ought to be teaching that class for me. Your butt. Show me the money. Show them the money. All right. Well, you see how I've gotten rich on it. So welcome to the club.
Oh. Yes, you have.
Yeah. Everybody say, you moved to Wisconsin. You got a big farm? Well, no, I don't have a big farm. Got a nice little apartment looking at the lake, but no big farm. I got the hat, though. We'll say, you guys remember that expression? Yeah. He got the hat, but he doesn't have the ranch, or something to that effect. But these workshops are working pretty well. I've had several. We tape them, and they become available to the folks who've signed up for them. Everybody's paid for the workshop, as they always have, but now that we're online, it's not costing as much, though the content is certainly there. In fact, maybe there's more content. So what I want to do, I have emailed to you a schedule of the workshops that I haven't taught recently. And these are ones that we're prepared to teach, and they are. I don't have it. I wish I had it in front of me, but it's actually I sent it to you guys, but I didn't print it out for myself. But what I'd like you to do, if you will, and everybody who's on this call for that, is if you will take a look at that list and a little bit of descriptions there. If you have any more questions, reach out to me and I'll certainly answer them. But my question would be, among those 5 or 6 that are shown, which one, maybe 2, would be of particular interest to you right now? Because what I want to do is I want to set the schedule for spring and how as we move through the workshops. You'll find that the workshops as a whole have always been, and I think folks who've been involved for some time will tell you, you stick with the workshops, you pretty much get as much as I can do. It's all I know about real estate. Just simply divide it up in nice little 1-day bite-sized sessions. So take a look at it. Now what we're going to do is I'm going to hold whatever workshop it is for possibly even later on this month, and you'll all get probably endless emails on that. Don't charge for it, but not nearly as much as folks have always paid before. And it's going to be recorded. And then at some point, some 2 or 3 months later, it's going to go on our website and be available to members at no cost as a member benefit. And if that goes well, I'll do over a period of the next year or so, we'll have 7 or 8 videotaped workshops complete with text and transcripts and so on. So I hope you find that interesting. It's the best I can do right now, and I think it's a pretty good deal. And I'd welcome comments on it, or you guys can give me, what do you say, nice testimonials. I can use 2 or 3 testimonials for you guys. tell them how great my sessions are. What a terrific teacher I am. But but that's where I've been, and frankly, that's where I'm going. And I just ran out of time. I was going to have a workshop segment. I've got 2 completed that I taught, last year before my life kind of came apart. And so those will be on my website shortly, available to members. They'll also be available if you just come among the great unwashed and you're not a member and you'd like the workshop, you'll be able to buy it and download it and so forth. But that's the plan. I'd be interested. What do you think of that as far as plans go? Yes, sir, Al. Those edges, thumbs up. I'll accept.
It's a great idea. It's good.
Yeah,
It's
okay,
really good. I can tell you that I've taken virtually every one of those courses, and they're great. At construction practices, Phil, is incredible. That's good. That's a good course.
And that's one I've already taught. So that's going to go on the website pretty soon. So members will have access to it. It'll be self-directed. There'll probably be 30 or more individual short videos that, in fact, you paste them all together. It's our whole session. But there'll be a self-study thing. You go through at your own pace. And as soon as you finish one, you have access to the next one and so forth all the way through. And so I love construction practices. It's kind of like, it's almost the core of everything we teach on the rehab side of what we do. Any further questions on that?
I think I missed when you said the emails were coming out.
Yeah, I was looking for the email.
It ought to be in your email now.
No, it's not. I'll check my spam, but
yeah, I got it.
Oh, you have it?
Yeah.
All right. Well, if one person got it, everybody got it because they all went out at the same time, same list. And those who got it will be those who signed up for today's event. And by email. If in fact at the end of the day you haven't found it, drop me an email. I'll send you another one because I really would appreciate your advice on this. You got a wide variety of subjects we can undertake, from property management to investing, budgeting, and so forth. And so I just like your guidance. What are your priorities? What would help you most right now? And then we're just going to go down the list until by the end of the year or before, we will have worked through all those workshops. And it takes me a while to edit those things and put them in shape to put on the website, but I'll get right on it. It's our next big thing. So that's what's up.
This Walter.
Yes.
I just chimed in. I didn't register.
Well,
probably why the video ain't coming up.
Well, no, it shouldn't be it. If you found us, you got something to drop me.
I'm going to drop you an email anyway because I want to, get back in the group. I want to rejoin.
Yeah, do that, and just whether you found it or not, I'll shoot you another copy of that list of.
Start out fresh for
the ones there, the 2 that are prepared, and I'll be putting on the website in another week or so. Indeed, it's construction practices. That's a blockbuster session, boy. It's a big session, a lot of material in it. And the other one was project management, if I recall correctly. And so those are with a little more work on my part. They're ready to go on the website. Those of you who are members will have access to it. Those of you who aren't members can pony up and buy it. Always happy to sell it to you. Incidentally, any of this stuff, just figure they're guaranteed. Any of these things, you get into them a couple of weeks and you think they suck, then just let me know, and whatever you paid for it'll come right back to you. That's
I had a question for Mr. Al. You still planning on this year doing the seller finance course?
Yeah,
Yes.
Yeah, Al did a nice run up of that again this morning. So when you get the tape of this session, you'll have that presentation as well, Linda.
Yeah.
Yeah, with his phone number, and you can probably call him and rag him. Okay.
Yeah, it's been it's going to be modified a little bit too, Ms. Linda, because with the new changes coming up, it's like I said, it's going to be for those of us that are prepared for this tsunami of properties coming in. For those, regardless of what your goal is, buy and hold, be a landlord, seller financing, whatever. The abundance of inventory is going to be fairly vast, and it's not limited to the states that I mentioned before, which is my preference, but in Illinois as well. In fact, I don't know that I have a capability to share my screen. Do I, Phil? I don't think so. I don't have it.
You should, but I don't know how it works. Sorry.
You share.
I think you just click.
Yeah, there's a share button.
The share button at the bottom where the chat is.
Yeah, and so maybe if you click on it and just pull whatever you want to pull up onto your screen.
I tried it. I tried it when you were talking, but I couldn't do it.
Yeah, well,
I'm old.
I fail a lot. I fail a lot. Hell, forgive me. If it's interesting, if it's something that I should be emailing around, then send it to me, because I can.
For Al,
yeah.
Are those folks are primarily liquidating their assets? They're looking for cash transactions, right? They're not looking for anything creative.
It's very creative.
It's very creative. The thing we need to define which ones. I mean, if the hedge funds and the banks are trying to get rid of the inventory, right? The buyers of the assets that you acquire from these hedge funds, you can deploy cash from a variety of sources. Private investors, as John indicated, or excuse me, that's bad English. It's stated. You can use your IRA money to do that. You can do some syndication. You can do some hypothecation of the notes, meaning you can pledge your notes as collateral. The possibilities are endless almost. It's just that we need to figure out what inventory of properties or assets people want to buy. And I have in good authority that Illinois, particularly the south side and the south suburbs, are going to have a pretty high percentage of properties that are going to become available in the near term.
Okay.
And if you think about this, I don't know if you remember was it the Resolution Trust or something like that, when the savings and loans kind of took the pipe about 15 years ago, and there were folks who waded into that. And there are fortunes to be made. I mean, it's huge. And just from what I understand from Al, I think my strategy would be, as soon as I can, I try to do at least one deal. So I've gone the whole cycle of paperwork and all that kind of stuff. It's not very complicated, but learn the ropes. And then I'd turn around and I'd put together, he mentioned syndicated. I would syndicate it. I'd pull together investor capital where the mission is to buy and sell or buy and hold these properties. And put together $50,000 instead of the 5 or 10 you might have, and go to it. If you don't like that responsibility, then just simply go a little bit slower, because the margins are there. You can build your capital pretty fast. I think it's a wonderful opportunity. It's just for those of a certain age. You just kind of listen to it and say, "Well, that's for Roscoe, and he's a younger man."
For syndication, Mr. Phil, don't you have to deal with SEC lawyers?
No.
So you can't even start?
No. Yeah, first of all, it's it's what you call a private placement. But you don't have to worry about that even now, syndication, because the LLC gives you the same benefits. So you form an LLC and you bring people into it, and it's probably less paperwork. SEC has nothing to do with it. Banks don't have anything to do with it. You're on your own. You gotta,
Right.
More question.
just get a lawyer that knows what they're doing.
One more question for Al. So what's the theory behind these hedge fund folks liquidating performing notes? I mean,
their logic is this, Roscoe. When you have a hedge fund, they are typically on a 5-year lifespan, meaning that these hedge funds collect all this money from different investors, right? Whether they are accredited or not. So they pull all these funds and they buy properties with these funds. And in exchange for that, they get a dividend every month. They get the investment. Well, at the end of 5 years, Roscoe, these hedge funds have to liquidate that investment, return the principal to their investors, and move on to the next project. It's then when they pull these assets together, whether they're performing notes or non-performing notes, and they get rid of them, so that they can get the money for all those properties, put themselves in a cash position, and move on to the next project. That's the basic philosophy of these. So, but they have a different requirement because they are in the business of yields. They securitize all of these assets, all of these mortgages, and they are the ones that deal with the FEC, the Securities and Exchange Commissions. But with us, we are buying the property, the personal property. So we don't have to be. We're not regulated by the SEC rules. If you were to buy a bunch of notes and package them together just like they do, then yes, then you have to have, you have to be a registered agent and all this other stuff, which I don't want to get into that. You get into the Fed's putting you and targeting you and everything else. No, these are you buying the one-off, and you're doing all kinds of things with those mortgages. But as far as acquisition, you can just buy them from the hedge funds. Disposition, you sell them on a one-off basis.
Okay, because at one time, and maybe that was 5 years ago or so, I think it was probably more than that, the ma and pa operators like ourselves, the thinking was that these hedge fund folks were buying up entire blocks, and there was no room for the little people. And so I didn't know that was a 5 year.
That was then. This is different. It's changed a great deal because most of these, to your point, Roscoe, back in 2000 and prior to 2008, prior to the debacle of 2008, these assets were only made available to the very rich. Well, that changed because they didn't have enough rich people to buy all these assets. So that's when they decided to decontrol, so to speak, and make these assets available to the mom and pop people like you and I. And similarly, the mom and pop, the small time investors are creating notes and also selling those notes for whatever reason, a variety of reasons, divorce, kind of like a house. People get divorced, circumstances change, and instead of medical reasons, instead of carrying the note anymore and get the $300, $400, $500 a month in mortgage payments from the product of them carrying a mortgage for somebody else, they want to liquidate. They want to cash out. So they advertise their notes for sale to people like me, where I can offer them a little bit of a discount, depending on how they are, because these people are not that sophisticated in creating notes. So there is some hair on them. So your job is to offer the discount price because they bake the cake, they bake the pie, so to speak. So it's your job to rehab, to rehab the loan. You can just like we can rehab a house, you can rehab a loan. There may be title issues, there may be some property issues, there may be some taxes that are left unpaid. So these folks, they just want to liquidate, they want to pay their medical bills, and they sell me their notes at a discount that is not going to be as deep as what I get from the hedge funds and the institutions, but I still get a decent enough return that I can either keep it for my portfolio, put it in my IRA, or sell it to folks like you. Or I can also partial it off. I can buy the note and I can partial it. I can sell John, for instance. If I buy a mortgage for a mom and pop for 360 months, 30 years, I can decide to probably sell John the note for the first 10 years, the first 120 months of that. And then at the end of the 120th month, the mortgage payments come back to me. That's called a partial. Why do I offer that? For two reasons. Number one, the highest yield on a mortgage is when the mortgage is young, right? Because most of the payments that you make are almost all interest. So that makes it attractive to my investor. My investor's name is John, and I said, okay, I'll give you the higher yield at the upfront, and I'll get the last 20 years of that mortgage. And my view is John gets to win because he gets the coupon rate on that mortgage. From my perspective is I get my payments later on because I need the passive income because I'm old. I'm 60 years old and I just want money for retirement, but I have a happy customer in John who will continue to buy from me. And then after the 10-year period is done, I get the payments reverting back to me. That's one of the strategies. And like I said, there are many, and we can spend hours and hours talking about this project. This initiative. It's exciting, I think.
Mm-hmm.
Yeah, I think the opportunity is exciting. One just quick technical question. How does market value on these properties enter into your equation or process?
It enters people get drunk on the yield. People get drunk on getting the return on the money. Like I said before, you make your offer based on what's more attractive to you, the market value of the property that has dropped in value, or the unpaid balance on that mortgage. So because you create your market, your seller finance value, not the market value. I find that people are more willing to pay money for more to own the property than to rent. So if I have an opportunity to sell a house via seller financing for $600 to somebody that is renting it for $600, chances are they are going to go with me because I'm offering something for them that is going to do several things, not the least of which is to sell equity, get the deductibility of the interest rate, the mortgage rates, and all that other stuff, and they can own that place. They can call it their own. So market value for me is of consequence, but not a very strict consequence because I'm creating my own market. I'm creating my own seller financing value versus what the market rate is going. Remember, you're not using a realtor to seller finance the properties. You are marketing these properties using seller financing because you're creating a partnership. You're creating an alliance between your borrower and you as the bank.
Okay. That's great. All right.
It's called, like John, in case, it's called being a deal architect. You need to architect the deals to your benefit, and you can pay retail for a property if you want to, as long as the seller of the property is willing to take your terms.
Yep.
That's the keys. That's the keys to the kingdom. Getting your terms.
And you run through one or two of these deals, and with minor differences, they become routine. That's my point.
Right.
Same as I always said about rehab. Once you've rehabbed a single family, you go to the second one, you discover, son of a gun, they're all the same. You put the same vinyl windows in, the same furnace, same ceramic tile, and that's how we do a 21-day rehab. We going in, we know what needs to be done, and we can be very efficient at it. And that's your task. And you can also get bragging rights on properties that you control in 4 states. How will that sound with the boys? And of course, they'll expect you to pay for rounds. But anyway, that's how it goes. Okay. Well, are we having fun yet? Do we have fun? Looks like Roscoe's having fun. He's looking contented. Anyway, that's good.
Did that answer your question, Roscoe, or did you need more elaboration on that?
No, you're good. I did have a question. I forgot what it was now, but no, that was good.
I think you also have his phone number, so you can chase him.
Yes, I did write that down.
That's good.
There is Phil put out this back in the day, and I don't know what year it was. Phil, help me out here. Is it 2002 or 3 when you do the 21-day rehab? That's a fantastic DVD. I mean,
I'm gonna make that available.
Do you have it?
I've got it. I've got just several hundred copies, hard discs of DVD. But then I'm also going to put it on our website, so people, you can buy it on the website or take it as one of your. That was in the dead of winter, and you did that in the dormer. Remember, it was and we legitimately did it in 21 days.
Yeah, that was in the dead of winter, and you had issues with the dormer and everything else. And I remember I used that particular DVD as my model for one of my deals when I was rehabbing. So,
question for you, Al. So maybe I didn't catch all of it, but you mentioned the fact that these forbearances are about to end and all of that. For what it is that you're doing, this liquidation of assets that the hedge fund folks are doing, is that a separate issue from the forbearance?
The other model? Yeah. Well, it's a continuum, Roscoe, of once I acquire the property, then I have choices, right? I have a choice. I can keep the once I acquire the paper, I'm controlling the property. I don't own the brick and mortar, but if I decide to sell the asset as a brick and mortar, I have to foreclose. My preference is not to foreclose on anybody. My preference is to do one of the 3 choices that I have, which is modify this person's loan so they are able to afford it, or I can get cash for keys and deed in lieu. I like to be really tough on the problem and real soft on people. I'll tell them, if I can't, clearly you can't pay for this mortgage. I tell you what, why don't we part friends? Give me the keys to the house, leave the place clean, and I won't report this on your credit. And I can give you the U-Haul, pack your stuff and leave. Then now I have the paper, now I have the mortgage, and I also have the property. Now my job is to market that property via seller financing, Roscoe. That's where the 2 elements kind of come together in that strategy. Okay. Once I'm able to sell that property, seller financing, then I can get the passive income by way of I become the bank.
Okay, so when you made reference to those select few states that don't have a long drawn out foreclosure process, you were saying that from the perspective of, I think you mentioned Indiana, and you didn't.
Ohio, Indiana, Ohio, Michigan, Texas. Georgia, and Texas.
Okay, and so you're buying a lot of these properties sight unseen, or at least theoretically sight unseen, because you're not visiting those properties. You're purchasing those properties for the express purpose of either doing one of those 3 options that you just mentioned. Okay.
Correct.
Is that your primary
focus?
Yeah.
It's one of them. I also, yes, the short answer is yes. The long-term prospect is that what I like to do is sometimes I like to take those a group of properties, and then if I need to put myself in a cash position to buy something like what is in John's mind to buy commercial paper, then I'll just liquidate the single family homes and buy a professional building. We bought prior to Harvey. A perfect example for you guys is this. Prior to Harvey, we were looking at me with these other 2 syndicators. We were looking at a place it was a dental office in Houston. Harvey hit and everything was flooded. The infrastructure of that building was so decimated that building was, when we were looking at it, for the rental value, it was at $3.75 million, I believe, if I'm not mistaken. But after the flood took place, we were able to purchase that $3 million building for the grand price of $900,000.
Hmm.
So and there were issues with the title. There were so many people involved and everything else, but we cleaned the title. We cleared up the title. We had the insurance company pay the claim. Obviously, there were some issues with the claim when the mud and all this stuff was when the waters receded. You had to basically chisel off all the mud, so that brought the value down. It was going to take a lot of money and a lot of time to clean that up. Well, we did, but nowhere near the $3 million value. So what we did instead is, what if for $900,000? We put some minor cosmetic things after everything was done, and instead of putting dental people in there or doctors or whatever, they turned it into something more affordable. There were some beauty shops and things of that nature, beauty shops, some retail shops in there, which made it a lot more affordable, and it helped the neighborhood. And it's now promoting a better place for people to congregate up until obviously COVID hit.
And, okay, and when you say we, because I was going to ask you, I didn't get the impression that you were doing much in the rehab space, but you had to rehab that building to some extent. And so
Yeah.
You're talking about Houston, Texas. You say we. How did you orchestrate all of what you did there?
Yeah, we as I said before, we have outsourcing for everything. When the market was created from all these foreclosures back in 2008, there are companies called property preservation companies. And these companies are in the business of, and I'll give you a name, Loudon, L-A-U-D-A-N, Loudon and Associates. Okay. And they are in the business of winterizing places, cutting grass, cutting weeds for the banks of America, of the world, for the Bank One, for the Morgan Stanley, whatever, for all these people. And so these folks preserve the properties for obvious reasons, so they avoid vandalism, they secure the properties, and they also do some rehabbing for you. So they are obviously part of my approved vendors list. I have personal relationships with, and you hear me talk about investors in California and investors in New York, that I have networked with in various groups that I belong to, and we have formed syndications. So when we pull our funds together, I'm the managing partner for this syndication. So it is my job as a partner to orchestrate and organize the rehabbing of all these projects. So I retain the title company to do the title research. I hold an insurance company to do an insurance company or a broker company, industrial broker, to do a BPO. And that stands for the acronym for broker price opinion.
Right.
Okay, so we base all of that information, we absorb it, and we do our analytics and due diligence when we look at value, yield, the return, and what my clients, my associates, my syndicators are wanting out of the deal. There's percentages of ownership. Obviously, whoever puts more money into the deal, they get their yield every month. But so that's how it works. We outsource everything. And I mean we, because we are a team of investors that they trust me enough with their funds so that they put me as a principal or the principal member, organizing member that is going to orchestrate and coordinate everything that gets released out of this thing, including up to and including the accounting, because that's really important. And the net operating income and everything else. Once you do the due diligence, there's no turning back. Once you make the offer to buy these buildings, you better be Johnny on the spot, because then if you don't pull the trigger and buy them from these hedge funds, Roscoe, then you're going to be kind of blackballed. Right. They're not going to want to do business with you.
Right. Okay.
So.
Okay.
But there's a lot more. And again, I wish I don't know how, but I'm going to learn how to do this on Zoom. I'm going to share some of the documents, some of the projects that I have done in the past for the group. And so it gives you an idea, it gives you a point of reference as to where you are now, where you're presently at with your investment strategies, and where you want to go. And again, don't limit yourself to one or two type of assets, Roscoe. The sky's the limit. It all starts with your mindset. You got to draft out the goals that you want. I was stuck. I mean, up until I met Phil, I was spinning my wheels, but he gave me a very good base for what I wanted to do. I mean, he and I had coffee all the time, and I was frustrated. But then I got myself focused, and it just went from there. And once you get the juices flowing, once you get one system, you build on that system, right, Roscoe? And then you start building blocks to become the bank, to be the infinite banking system, to buy whole life, dividend-paying whole life insurance that you can extract cash or tax-free money to buy this, that, and the other thing. I mean, there's an abundance of strategies that you can conduct to get your goals in place, and you just implement the plan.
But one last question, maybe slightly of a personal nature. What niche would you say is the most lucrative for you? Because you seem like you have your hands in a lot of different.
Yeah, single family homes. By far, single family homes. That's your niche.
That's not what I expected you to say.
Okay. Yeah, well, it is. It's a single family homes because this is the market because of the low price band of the assets where I buy. For instance, Waldo, Arkansas. The joke is, where's Waldo, right? Waldo, Arkansas. It's a place that I purchased for. The place was worth, the loan was $90,000. The market dropped the value on that property to $60,000. Once I got the tape from the hedge fund, I purchased that asset, the note on that asset, for 13 grand. I spent $3,000. The guy abandoned the place. The guy went from our Waldo, which is about 45 minutes south of Little Rock. He moved, abandoned the place, and went to Dallas. He was not going to give me a deed in lieu. So my first strategy of modifying the loan was not going to work because he was not living in the house. My second option, he abandoned the place. He was not interested in giving me the deed in lieu. He's like, forget it, the hell with it. My third option was foreclosure. So I foreclosed it. I spent $3,000 foreclosing it from cradle to grave. I bought that for 13. I worked with the mayor of the town in Waldo. And I didn't, because it's so remote, Roscoe, and this is a good story for you to kind of understand where I'm coming from. The asset was valued so low and the town was so small that I had a problem getting the vendors in there because it was so remote. So once the mayor got wind of the fact that I owned that I was the owner of that note, she contacted me directly and she said, Mr. Curiel, I understand you're the new owner of this place. Do you understand that this is a place that has been abandoned for a while? And I said, yes, I do. I'm fully aware of that. She goes, and I see that your address is in Chicago. I want to tell you something. She had been newly elected in the town. I said, I want to tell you something. My platform for this place was not to allow renters and slumlords to come in and destroy my town. What are your intentions? Because you people from the north are coming in and they just, I mean, she was attacking me passively and aggressively. And I said, whoa, ma'am, this is not my intention. My intention is to fix this place and sell it to a capable person that's able, that's going to pay the mortgage. She changed her tune. I said, the problem is right now that I can't get any of my vendors to cut the grass. The grass was about 5 feet high, Roscoe. I had all kinds of code issues and what have you. The facade of the building was a beautiful Victorian, 5 bedrooms. It was starting to get weeds and the gutters and everything else. So I got an insurance, a real estate company to do a BPO. They drove by and they found out that while the property had all kinds of weeds, the inside, the guy that moved to Dallas, the guy had been working on his floors and the interior was impeccable. So I said, all right, I tell you what, I'm as soon as I find somebody that can cut the grass and paint the facade, I will place this house on the market. So there's a reason I'm telling you all this, and it's a long story, but just bear with me for a minute. 2 days later, the woman said, I understand you sound sincere and everything else, Mr. Curiel. you don't have anybody to cut the grass, we will have our city people cut the grass for you. I said, holy shit, holy cow. I said, really? I said, yeah, no problem. I says, well, let me buy lunch for your employees. That's great. She goes, no, I can't accept that. I can send you an invoice. She faxed me an invoice for $150 to cut grass. What she did not tell me was that in that $150 fee, she included power washing the house, power washing it. So they cut the grass, they cut the weeds, and they power washed the place, and the place looked spick and span. It was great. It was no longer a contentious relationship. So I said, thank you very much. This is great. So I remember I told you at the beginning of this thing, I spent 13 grand acquiring the note, $3,000 in foreclosing fees. I was up to $16,000 or thereabouts. 16,000 plus a 150.
150, right.
Right? She called me 24 hours later and she goes, hey, Mr. Curia, are you finding any luck getting a buyer for this house? I says, no, not really. I'm working on it, but I had other projects going on. She goes, I think I may have found a buyer for you. I said, you're kidding. She goes, no, this is a very small town, very, very close-knit town. And we can't get involved, but there's this lady who is a phlebotomist who works at the local hospital, who's trying to get away from this bad relationship with her husband and 2 teenage boys. He's abusing her and everything else. And we can't get involved. It's a domestic issue. But she drives by your place and she asked about who owned it and if they would be interested in buying it. I said, that's really nice. Thank you very much. Yeah, I'll talk to her. Bought the place for 13, all in 16 grand, right? 16 grand and some dollars. I was able to sell that place for 50 grand to this lady. And I'm carrying the note for 30 years at 10% interest. I'm carrying the mortgage. She wouldn't otherwise be able to qualify for a mortgage, right? Because anything less than 60 grand, you can't get a loan for. They're not bankable.
Okay.
So what you have out there is a very small niche, Roscoe, that is what seller financing takes the place that regular financing or banking does not do. It fills the void, right? So her mortgage payment for 2 years has been $450 a month. And that $450 includes taxes. The taxes are $400 a year. Her insurance is $50 a month. So I'd get $375 a month right into my checking account from the servicing company that allocates, and I don't do any of that. The servicing company gets the check from this lady. They allocate the money for the taxes, for the insurance, and then the difference they just put into my corporate checking account. $375 is not a lot of money, right, Roscoe? It's very comfortable for this lady, but you do that 20, 30 times, 20 times 300, now you're dancing. I got 66 of those.
Okay, all right.
That's the niche.
How did you find this property?
From the list of the hedge funds that is made available to me from dealing with these folks.
Okay.
So I filtered. He sent me, Mark, that's his name, Mark, sent me the list. They call it in note investing jargon, it's called a tape. I don't know why they call it a tape. It's nothing more than a list with a spreadsheet. And it gives you soup to nuts, what is the property, the address, the state. I have my choices. I filtered it down. The list was like 150 properties. There's no way in God's green earth I was going to do due diligence. That's the only thing that I do myself. I do all my due diligence. There's no way that I'm going to look at 150. I'm not interested in 150 properties and all over the place. So I filter by the states that I focus, like I share with you guys.
Okay.
So I looked at Michigan. This one came up for 14 grand. I said, what can I lose, right? It's not a whole lot of money. Yeah. I paid cash for it. I made my indicative offer. I said, what's the price band that you accept for the offer? He says, anything goes, because this property's been vacant for a long time. So I offered 13. They wanted 17. We settled on the 13 and a half, and we just went from there. There are three elements that can kill a deal, a note deal. And those are taxes, blighted property, or title. And every deal is going to have a little bit of hair. It depends on your tolerance for risk. And so title was fine because they had been cleaned up. It was a BPO, obviously. It was a BPO note. Mm-hmm. So the title had been clean. It was, on the surface, it appeared to be a blighted property because all the weeds were, growing and everything else. But we cleaned it up. So blight was no longer an issue. And the taxes were only like $600. That's the other thing I paid. I paid the $600 in back taxes that hadn't been paid. So if any of those three elements, Roscoe, are missing, or you have questions, or they don't look right, my spidey antenna goes up and says, I don't walk away from those deals. I run away from those deals. But this was a nice little deal that did a lot of things for this lady. I mean, she was able to get away from this guy that she was abused by. It gave her and her boys the comfort of being in a place that they can call home. And it gave me a nice little monthly passive cash flow that I don't have to do anything.
So due diligence in a case like that, where presumably you don't have MLS access to local database in Arkansas, is comprised of what?
A lot of things. It's a list. There's a short list and it's a long list. Okay. Look at the rents in the area. You look at the title. You look at comps. What I do, you look at the crime rate. And there's a bevy of websites that I have on display on my browser, so that when I get a list of properties from the hedge funds, I have them all on my browser. And I start with crime. There's a heat map. If you look at Trulia.com, Trulia.com gives you a heat map on the crime. Now there's crime and there's crime. There's crime from people just throwing stones in your car and just busting the windows or whatever, to stabbings and shootings. Those are not the ones you want, right? Yeah. So you look at the crime rate and the heat map. You look at Zillow for comps, rental comps, rentals. I know Zillow is inflated and everything else, but if you scroll down the page on Zillow, you will see the comparable rents in the area. Okay. You look at also the title. You need to do a title search. And First American, I've been doing business with them for a long time, so they gave me access to their platform. They gave me a user ID and a password. So I look at title very quickly, a very cursory review of title that gives me liens or whatever else, whether it's a tax lien, an IRS lien, or whatever. If there's a chapter bankruptcy or whatever. In our business, bankruptcies are like, people will rock. I don't want to deal with a property that has a bankruptcy and liens or whatever. Those are very easy to vacate. That's part of the rehab process of a loan. Chapter 13 is wonderful for us because you have realignment, reorganization, right? So you have a trustee, and the trustee is going to give you dibs on anything that is collected. So you get paid directly by the court and all the arrear charges that come with it. Chapter 7 is liquidation. Again, you can get the property even cheaper when you acquire them for Chapter 7. That's another part of the list goes on and on. I don't want to take up most of the time, but there are elements of your due diligence that you can do. It is very inexpensive. Once you get deep in the weeds, Roscoe, and you really are ready to make a commitment to buy the property, then you can invest a little bit of money to get a BPO. If the property is more than 6 months or a year since it's been looked at or made available, then I would do just a brief BPO, a drive-by to see how the property, the state of the property or whatever else. And you make your decision based on your findings. The rents, there's another website called Rent-O-Meter. I'm sure most of you guys know about it. Mm-hmm. You look at the going rents for that area. So you because you buy these notes at such a deep discount, you look at the rents going on in the area and you can make a decision. All right, if the rents are $900 a month, regardless of what the mortgage before on this asset was, because I bought it at a discount, I can plug in the $900 and do the finance thing and do the calculation. It's nothing more than that's, the Excel formula, and you back your payment and what you are going to offer that house for based on the rents paid.
Okay. And one last question, I promise, and it's personal. What percentage of your assets are Chicagoland versus elsewhere?
I got 0 in Chicago, 100% everywhere else, for the reasons that I outlined before. The foreclosure process in Illinois is too long, and my investors don't want to wait that long until I, take possession of the place.
Okay.
Now, that's not to say that I'm not interested. I mean, I got access to assets in Chicago, but going forward with all this inventory that we are expecting to get, I may be inclined to invest in Chicago going forward. Illinois.
Okay.
All right, hey, we got to wrap. So this was an amazing session. If you're not excited, take an aspirin and go to bed. I think it sounds like a great opportunity, and it's going to take preparation. Going to take a little bit of capital. You're going to need a plan, business plan. If you don't know your net worth, you better know your net worth. It's all the standard stuff that you would do getting ready to undertake any real estate initiative. And as far as the properties are concerned, the more you do, the less concerned you are about perfect value. You're going to say, well, all right, I missed the mark on this one. I'll do better on the next one. That's quite frankly, that's how I looked at rehab too. So you got to think about that.
Bill, I have a question. Can we join the program online, or should we shoot you an email?
You ought to be able to do it online. And if you can't figure it out, that's our website, urbanrehabber.com.
Yeah.
And which I'm rebuilding, so half the pages, all the copies there, but they don't look right. So bear with me. And if you can't figure it out, call me and I'll help you do it. All right. Well, this was great. You guys have got a lot of patience. You stuck with it. On the other hand, I think we all learned a lot. And so, Al, I want to thank you. I want to thank everybody who participated today. And now, take a look at those workshops and let me know what you think I ought to do for starters. All right. And if you can't find the email me. It's Urban Rehabber. Well, you got email addresses for me because I've been acknowledging your registration for this meeting. And those email addresses are fine. All right. We done?
Yes.
Very good. Okay, thank you, and have a good rest of your weekend. Thanks a lot.
Thanks, everyone.
Thanks, everyone. Nice to see you, Mr. Phil.
Well, nice to see
All right,
you.
take care. Happy New Year, everybody.
Happy New Year.
All right, happy New Year's.